Thinking like an investor is a fundamental shift in mindset, one that separates those who struggle financially from those who build lasting wealth. Most people focus solely on income, on the money that comes in each paycheck, without stopping to consider the bigger picture, how money works over time, how value is created, and how opportunities present themselves. Investors don't just look at numbers, they look at potential. They see beyond the immediate and focus on the long-term game. To think like an investor means you see money not as something to be spent or hoarded, but as a tool, a seed you plant, nurture, and grow. At its core, thinking like an investor requires understanding the concept of value. It's not about the price tag or the dollar amount you see today. It's about what that money can become. For example, when you put 100,000 Zalosen into a savings account earning little to no interest, it's just sitting there. But when you invest that 100,000 into a business, stocks, real estate, or education, you're turning it into something that has the potential to grow exponentially. Investors focus on buying things that have intrinsic value and the potential to appreciate or produce income. Opportunity is another pillar of investor thinking. Investors are constantly scanning their environment, looking for chances to grow their money. This means staying informed, understanding markets, and being prepared to act when the right opportunity arises. It's a mindset of abundance, not scarcity. Investors believe there are always opportunities available. They just have to be patient and disciplined enough to recognize them and smart enough to act decisively. That means sometimes waiting, sometimes taking calculated risks, and sometimes saying no to short-term temptations that don't align with long-term goals. But the most important element in thinking like an investor is appreciating the value of time. Time is the silent partner in every investment decision. Compound interest, the magic of growth on growth, only happens with the passage of time. The earlier you start, the more powerful your money becomes. Many people underestimate this and think that building wealth is about big, quick wins. But true investors understand that wealth is often built quietly, steadily, and patiently over years and decades. They see time as their greatest ally rather than their enemy. To cultivate this investor mindset, you have to move beyond the idea of just working for money. When you think like an investor, your goal is to make money work for you. That means putting your money into assets that generate returns without requiring your constant effort. It's about creating systems that pay you whether you're working or resting. This shift from active income C earned by trading time for dollars to passive or residual income as an earned through investments is what leads to financial freedom. Thinking like an investor also means embracing learning and growth. Investors know they don't have all the answers, so they continuously seek education and advice from mentors, books, courses, and experience. They understand risk, and they don't shy away from it, but they manage it intelligently. They analyze their decisions carefully, avoiding emotional reactions and impulsive moves. This disciplined approach protects their capital and positions them for long-term success. Finally, thinking like an investor changes your entire relationship with money. Instead of fearing scarcity, you trust in growth. Instead of reacting to financial ups and downs, you plan with foresight. Instead of living paycheck to paycheck, you build foundations for lasting wealth. This mindset isn't just about money. It's about empowerment and control. When you think like an investor, you become the master of your financial destiny rather than a passenger swept along by circumstance. Adopting this way of thinking takes time and commitment, but it's the most important step on the road to building lasting wealth. It's the difference between surviving and thriving, between chasing money and creating it. When you start to think like an investor, You begin to see money in a whole new way, and that change in perspective can transform your financial future forever. Time is the most powerful asset any investor has, yet it's often the most overlooked. When it comes to building wealth, understanding and leveraging the value of time is what separates those who struggle financially from those who achieve true financial freedom. It's not about how much money you make today, but about what your money can do over time that really counts. The principle of compound growth, often called the wonder of the world, shows us how money, when invested wisely, doesn't just grow. It grows exponentially. Investors recognize that wealth is rarely created overnight. Instead, it is built steadily, like a tree growing from a tiny seed into a mighty oak over many years. Each small deposit or investment you make today has the potential to multiply and snowball into something far greater tomorrow. This means that starting early is one of the smartest financial moves you can make, because every day you delay is a day of missed opportunity for your money to grow. Patience, then, becomes a key virtue for investors. It's easy to become discouraged when returns don't come quickly, or when markets fluctuate. But those who understand time know that volatility is part of the journey, not the destination. Just like planting a garden, you don't see the full bloom immediately. You have to nurture your investments, give them time to mature, and resist the urge to uproot them prematurely. Time rewards the consistent investor, not the one chasing quick wins or trying to time the market. The power of time also allows for mistakes to be forgiven. No investment journey is without bumps, and even the best investors face losses. But with enough time on your side, those losses can be recovered and even turned into gains. The longer you hold on to your investments, the more opportunity you have to ride out downturns and benefit from the eventual upward cycles. It's this long-term perspective that fosters confidence and reduces emotional decision making, which is often the downfall of many short-term traders. Another important aspect is the difference between active income and passive income when it comes to time. Active income requires your direct effort and time. You work a job or run a business, and you get paid for the hours you put in. This type of income is limited by how many hours you can work. But passive income, income generated by investments or assets, works independently of your time. Once you plant the seed by making the initial investment or building an asset, it can continue to pay you indefinitely without constant input. This is why thinking like an investor is so vital. Investors leverage time by focusing on building assets that generate passive income streams. Whether it's dividends from stocks, rental income from real estate, royalties from intellectual property, or profits from a business that operates without your daily involvement. These income streams grow over time and provide financial freedom. They give you the ability to break free from trading hours for dollars and reclaim your time. Understanding time also helps in setting realistic financial goals. When you realize that wealth builds slowly but surely, you can set milestones that encourage steady progress rather than chasing overnight success. This mindset leads to more sustainable habits, saving regularly, reinvesting returns, and continuously educating yourself about your investments. Each of these actions compounded over years creates a solid foundation for financial independence. The key takeaway is that time is your greatest ally in wealth creation, but only if you start early and remain consistent. The magic of compounding interest and growth means that even small, regular investments can grow into substantial wealth given enough time. Waiting for the perfect moment or delaying investment can cost you dearly, not just in lost earnings, but in lost opportunities to shape your financial future. By respecting the power of time, investors develop patience and discipline, two traits essential for long-term success. They understand that financial freedom is a marathon, not a sprint. Every day, month, and year adds to their wealth-building journey, turning what might seem like modest efforts today into extraordinary results tomorrow. Time, combined with smart investing, doesn't just increase your money, it transforms your life. Building and accumulating assets is the cornerstone of creating real financial freedom. Too many people mistake income for wealth. They think that earning a higher paycheck or getting a promotion means they're becoming wealthy. But the truth is, income is only one side of the equation. It's what you earn, not what you keep or how you make it work for you. True wealth comes from owning assets, things that generate money for you over time, regardless of whether you're actively working or not. Assets are the foundation of financial freedom because they produce passive income, money that flows in even when you're not trading your time for it. This could be rental income from real estate, dividends from stocks, royalties from creative work, or profits from a business you own, but don't have to run day to day. The beauty of assets is that they create ongoing value and income streams, which multiply your ability to grow wealth exponentially. When you focus solely on income, you limit yourself to the number of hours in a day. No matter how hard you work, your earning potential is capped by the time you have. But assets break that ceiling. They work 24/7. They don't take vacations, and they don't get tired. This shift from earning active income to building passive income is the difference between living paycheck to paycheck and enjoying financial freedom. Accumulating assets requires intention and discipline. It doesn't happen overnight, and it's not a result of luck. It starts with a decision to save and invest rather than spend everything you earn. Every dollar you don't spend today is a soldier you send to the front lines of your wealth-building army. When you save and invest consistently, you're creating a powerful momentum that works in your favor over time. Investing in assets also means understanding the difference between liabilities and assets. A liability is something that takes money out of your pocket, like an expensive car, a big mortgage, or high-interest debt. Assets, on the other hand, put money into your pocket. Many people confuse the two because they focus on the lifestyle a purchase brings rather than its financial impact. To build wealth, you need to prioritize accumulating assets that generate income and minimize liabilities that drain your resources. Another key point is diversification. Don't put all your eggs in one basket. Building a portfolio of different types of assets, stocks, bonds, real estate businesses, helps spread risk and creates multiple income streams. This way, if one asset underperforms, others can pick up the slack. Diversification is a way to protect and grow your wealth more reliably over time. Education is crucial in this process. Understanding how different assets work, what risks they carry, and how to manage them is essential. Many people shy away from investing because they feel overwhelmed or afraid of making mistakes. But the reality is that every investor makes mistakes. It's part of the journey. The difference is that successful investors learn from those mistakes and keep moving forward with more knowledge and confidence. Building assets also requires patience. It's easy to get discouraged if you don't see immediate returns. But remember, wealth building is a long-term game. The assets you acquire today will grow in value and income potential over years and decades. This is why consistency in saving, investing, and learning is far more important than chasing quick wins or get-rich-quick schemes. One of the most empowering aspects of accumulating assets is the freedom it creates. When your assets produce enough income to cover your expenses, you gain the ability to make choices based on what you want, not what you have to do. You can choose how to spend your time, where to live, and what kind of work to pursue. That's financial freedom in its purest forms, having control over your life because you've built a foundation that supports you independently of your daily labor. In the end, building and accumulating assets is not just a financial strategy. It's a mindset shift. It's deciding that you're going to take control of your financial future by focusing on what your money can do for you, rather than how hard you have to work for money. When you start thinking this way and take consistent action, you move from being a consumer of wealth to a creator of wealth. And that change can transform your life in ways you never imagined. Financial education is the foundation upon which all successful investing is built. Without a solid understanding of how money works, how markets operate, and what risks and rewards look like, even the best intentions can lead to costly mistakes. Many people shy away from learning about finances because they believe it's complicated, boring, or only for the wealthy. But the truth is, financial literacy is the great equalizer. It empowers anyone to make informed decisions that can change the course of their life. To think like an investor, you must commit yourself to continuous learning. The world of finance isn't static. It evolves with new technologies, changing regulations, and emerging markets. What worked 10 years ago may not work today, and the opportunities of tomorrow will require new knowledge and skills. This means cultivating a mindset of curiosity and openness, always seeking out new information, whether through books, courses, mentors, or trusted advisors. The more you learn, the more confident and capable you become. Understanding risk is a key component of financial education. Every investment carries some level of risk, and there's no such thing as a guaranteed return. But risk isn't something to be feared or avoided entirely. It's something to be understood and managed. Successful investors learn to assess their own risk tolerance and choose investments that align with their goals and comfort levels. They also learn to diversify their portfolios, spreading risk across different types of assets so that no single setback can derail their entire plan. One of the biggest pitfalls for investors is letting emotions drive decisions. Fear and greed can cause people to buy high and sell low, chasing fads or panicking during downturns. Financial education teaches you how to detach emotionally from your investments and make decisions based on facts, data, and long-term strategy rather than short-term market fluctuations. This discipline is what helps investors stay the course and benefit from compounding returns over time. Learning about taxes, fees, and investment structures is another crucial area. Many investors overlook how taxes and fees can eat into returns. By understanding how investments are taxed and seeking out tax-efficient strategies, you can keep more of what you earn. Knowledge about different investment vehicles, such as stocks, bonds, mutual funds, ETFs, real estate, and retirement accounts, allows you to select the best options for your situation and goals. Financial education also means understanding the importance of cash flow and liquidity. Not all assets are created equal when it comes to how quickly you can convert them into cash or how they impact your monthly financial health. Some investments may grow significantly, but tie up your money for long periods, while others offer regular income or easy access to funds. Balancing these factors is part of making smart, strategic choices that fit your personal circumstances. In addition, education helps you avoid common scams and pitfalls. The financial world is filled with opportunities, but also with those looking to take advantage of the uninformed. Being knowledgeable protects you from falling victim to schemes that promise quick riches but deliver losses. It enables you to ask the right questions, seek second opinions, and trust your instincts backed by solid information. Finally, Financial education fosters empowerment and confidence. When you understand your money and your investments, you take control instead of feeling overwhelmed or dependent on others. This confidence encourages proactive behavior, regularly reviewing your portfolio, adjusting your strategy as needed, and taking advantage of new opportunities. It transforms investing from a source of anxiety into a purposeful and rewarding journey. In the end, financial education is not a one-time event, but a lifelong process. The more you invest in learning, the greater your potential for success. It equips you with the tools to build wealth, protect your assets, and ultimately create financial freedom. Without this knowledge, even the best intentions and hardest work can fall short. But with it, you're not just hoping for good outcomes. You're preparing, positioning, and creating them. That's the true power of thinking like an investor. Intentional money management is the practical application of your financial philosophy and investor mindset. It's the daily discipline that transforms good intentions into real, measurable progress toward financial freedom. Many people misunderstand money management as simply budgeting or cutting expenses, but it goes far deeper than that. It's about making deliberate choices with your money that align with your long-term goals, values, and vision for your life. The first step in intentional money management is creating a clear plan. This means knowing exactly how much money comes in, how much goes out, and where every dollar is allocated. When you are intentional, you don't let your money slip through your fingers or disappear without thought. Instead, you assign purpose to each dollar. Whether it's covering necessities, paying down debt, saving for the future, or investing in assets, this clarity provides control and prevents the frustration and anxiety that come from financial chaos or uncertainty. Once you have a plan, discipline is the next essential ingredient. Discipline means sticking to your budget and financial plan, even when temptation or unexpected expenses arise. It's about saying no to impulsive spending and yes to delayed gratification. Wealth building is not about depriving yourself, but about prioritizing what matters most and making trade-offs that serve your greater goals. The small sacrifices you make today, whether skipping an unnecessary purchase or choosing a more affordable option, add up over time and fuel your ability to save and invest. Intentional money management also requires consistent saving. Too many people treat saving as an afterthought, something to do only if there's money left over at the end of the month. But this approach rarely works because life is full of surprises that eat away at leftover cash. Instead, make saving a non-negotiable part of your financial routine. Pay yourself first. Set aside a portion of your income as soon as you get paid. This habit ensures you are always investing in your future before spending on temporary pleasures. Another critical aspect of managing money intentionally is managing debt wisely. Not all debt is bad. Some debt, like a mortgage or a business loan, can be a tool to leverage your assets and build wealth. However, high-interest consumer debt, such as credit card balances, can quickly become a burden that undermines your financial progress. Be intentional about reducing or eliminating harmful debt and avoid taking on new debt unless it's part of a clear strategy to grow your assets. Intentional money management means regularly reviewing your finances, your life circumstances, goals, and the economic environment will change over time, and your financial plan should evolve accordingly. Regular check-ins, monthly or quarterly, allow you to track your progress, adjust your spending, increase savings, or reallocate investments. This ongoing attention keeps you accountable and aligned with your long-term vision. Technology can be a powerful ally in intentional money management. Today's tools, from budgeting apps to investment platforms, make it easier than ever to monitor your cash flow, automate savings, and stay informed. But the tools alone won't make the difference. It's your commitment to use them consistently that matters. At the heart of intentional money management is the understanding that every financial choice is a step toward or away from your goals. It's about making money work for you, not the other way around. This mindset encourages empowerment rather than victimhood. Instead of feeling trapped by financial circumstances, you become proactive, taking control of your money and steering your life in the direction you desire. Intentional money management also fosters peace of mind. When you know where your money is going and why, you eliminate a lot of the stress and uncertainty that come from living paycheck to paycheck or feeling financially out of control. This peace allows you to focus more energy on growth, relationships, and the things that truly matter. Moreover, this disciplined approach creates momentum. Every dollar saved and invested compounds over time, just like the principles of investing. When you consistently manage your money with intention, your financial foundation grows stronger and your opportunities multiply. It opens doors to new investments, experiences, and freedom you might not have thought possible before. In summary, intentional money management is the bridge between financial knowledge and financial success. It's the daily practice of aligning your spending, saving, and investing with your vision for a secure and abundant future. When you manage your money with intention, you take command of your financial destiny, build lasting wealth, and create the freedom to live life on your own terms. Patience and discipline are the twin pillars that uphold every successful investor's journey. Without these two qualities, even the best strategies and knowledge can falter. It's not enough to know what to do. You must have the steadfastness to see it through, especially when the path gets tough or the results aren't immediately visible. The reality of wealth building is that it takes time, consistency, and the ability to stay committed when others may waver. Patience is the recognition that true financial growth does not happen overnight. It's a long game, often stretching over years or even decades. Many people want quick results. They look for shortcuts, instant gratification, or the latest hot investment tip. But those approaches rarely lead to sustainable wealth. Like planting a tree, you must give your investments time to take root, grow, and bear fruit. This waiting period requires faith in the process and confidence in your plan. It's about trusting the power of compounding returns, the resilience of diversified portfolios, and the upward trajectory of long-term markets. Discipline, on the other hand, is the daily practice of sticking to your financial plan, regardless of distractions or temptations. It's what keeps you contributing regularly to your investments, maintaining a budget, and resisting the urge to cash out during downturns or chase fads during market highs. Discipline means having the self-control to avoid impulsive decisions fueled by emotions like fear or greed. When markets fluctuate or life throws unexpected challenges your way, discipline helps you stay steady and focused on your long-term goals. Together, patience and discipline form a powerful combination. Patience without discipline might lead to complacency or procrastination, while discipline without patience can cause frustration and rash decisions. When paired, they cultivate a mindset that is resilient and unwavering, one that sees beyond short-term noise and stays anchored in a bigger vision. One of the greatest challenges investors face is emotional control. It's easy to get swept up in the excitement when the market is booming or to panic when it crashes. But emotional reactions often lead to buying high and selling low. The exact opposite of what successful investors do. Patience and discipline help manage these emotions, by grounding your actions in logic and strategy rather than mood swings. They enable you to view market volatility as natural, temporary, and often an opportunity rather than a threat. Another important aspect is the consistency that discipline fosters. Wealth isn't built by sporadic efforts, but by regular, repeated actions. Whether that's monthly contributions to an investment account, regular reviews of your financial plan, or continuous education, this consistent behavior compounds over time, just like your investments. The small, steady steps you take today lay the groundwork for exponential growth tomorrow. Patience also means understanding that setbacks are part of the journey. No investment path is without ups and downs. There will be times when your portfolio dips, when economic conditions seem unfavorable, or when personal circumstances make it difficult to stick to your plan. Instead of seeing these as failures, patient investors view them as opportunities to learn, adjust, and strengthen their approach. They use these moments to reaffirm their commitment rather than abandon it. Discipline extends beyond just managing money. It applies to your mindset and habits. It means cultivating daily routines that support your financial goals, such as tracking expenses, setting clear priorities, and avoiding distractions that can derail your progress. This level of self-management spills over into other areas of life, creating a virtuous cycle of growth, confidence, and control. Ultimately, patience and discipline empower you to harness the full potential of time and compounding. They allow you to transform good intentions into lasting results. Without them, even the best investment opportunities can be wasted through impatience or inconsistent effort. But with patience and discipline, you build not only wealth, but also the character and resilience needed to sustain it. In the grand scheme, these qualities shape not just your financial future, but your entire approach to challenges and goals in life. They teach you to delay gratification, stay focused under pressure, and persevere when the immediate rewards aren't visible. This mindset of steady, determined progress is what differentiates those who achieve financial freedom from those who remain stuck in cycles of uncertainty. When you embrace patience and discipline, you are choosing a path of wisdom, strength, and lasting success. It's not always easy, but it's always worth it. These traits become your greatest allies in the journey to financial independence, enabling you to weather storms, seize opportunities, and ultimately reap the rewards of a well-lived financial life. When you think like an investor, you begin to see money not just as something to spend, but as a tool to build lasting freedom. It all starts with a clear understanding of your financial goals, followed by a commitment to acquiring and accumulating assets that work for you. Education lights the path, giving you the wisdom to manage risk, avoid pitfalls, and make informed decisions. Intentional money management keeps you disciplined and focused, turning plans into action day by day. Above all, patience and discipline are the steady forces that carry you through the ups and downs, allowing your wealth to grow steadily over time. Financial freedom is not a distant dream. It's the result of consistent choices, deliberate actions, and a mindset dedicated to creating value beyond the paycheck. When you embrace these principles, you take control of your financial destiny and open the door to a life lived on your own terms.